Hello and welcome to another update video about Bitcoin. Bitcoin is heading into the weekend, as we all are, and there hasn't really been a decisive breakout to the upside today. That's what my concern was earlier today. I already mentioned that, if we don't get an upside breakout today, it will probably become another long weekend, and Bitcoin might fall back into familiar territory. What does it mean? Well, basically just below resistance. We've been ranging now the entire week here, after the price broke down. And since this move down started really here, and since we've landed there on Tuesday in the 77k area, the price has not been able to break above the previous highs, like the Monday high, for example. We couldn't break above that, not on Wednesday, not late on Wednesday, not on Thursday. Well, today we've tried, but we are sort of in that area now again to test those highs. I don't call that a sustained breakout yet. And we are also not above standard Fibonacci resistance, which is between $83,718 and $85,474. And from here, obviously, we can track higher prices. But the thing is, as long as we are not breaking above resistance, the downside pressure remains high. We could argue that maybe now that we are so close to the 61.8 retracement and Bitcoin is testing that level, and the white count, which is the short-term bearish one here, has not followed through to the downside, at least not yet. Well, we could argue that maybe the bulls are leading, but I wouldn't want to confirm that yet, because that's the main purpose for resistance, right? I have it on the chart for a reason, because it really needs to be broken to confirm the bulls are taking the lead, and then we can look for the 5-wave pattern. Then we can watch for the 5-wave pattern, because at the moment all we have is a rally which I have labeled wave 1, a move down in wave 2 that was a nice 3-wave move down, and now a rally that looks potentially impulsive. However, again, it stopped exactly at the 61.8 retracement at 85,474. Not without reason, one of the key resistance levels I've called out here for the internal wave 4 in the short-term bearish count. So just because levels get tested, I mean, they are there, those resistance levels, they are there essentially to be pressed, right? That's what the price is doing. Just by testing resistance doesn't mean the bulls are leading. Okay, so it's quite normal that these get tested, maybe even a brief break, and then we can easily fall back into the range. However, because we have briefly at least broken above this week's highs, and because the market has formed the higher low on Thursday, I have added, after the market obviously started to move up today, I've added micro support to the chart that supports the yellow scenario. So if this really is wave 1 to the upside, wave 2 to the downside, we are now in a third wave, then the market should hold above 82,560 to keep the upside pressure alive. That's the 50% retracement of the currently running third wave, and that's the level that, if it's broken to the downside, would basically indicate failure. It would be an indication that we're falling back into the previous range. So that's key now. So that means for the weekend, there are a few important levels to watch. We've got 82,560 as micro support. That's the level that keeps an upside impulse alive. The potential for an upside impulse being kept alive against that level. So that means any break below it will mean that probably the market is weaker than it should be in the yellow scenario. And then that would be our first signal that the bears are taking over. And we've had already a failure of the bears here in this range. We've had a failure of the bulls several times. So it's about this pivot, 82,560. And to the upside, we've got the 85,470 level from a Fibonacci resistance point of view. So you see we are now squeezed between micro support and micro resistance. And I treat the 85,470 level as more important than the 82,560 level, because this is only micro support. whereas resistance is really relevant for the entire decline here for a larger recovery move. So yeah, that is more important and more significant. Okay. If we break above resistance, then there is some structural resistance here around $86,710. And the third wave in yellow needs to get to the 138% extension at 90K. That's the first ideal target for a third wave. So these are the parameters for the weekend. Should the market break below 82,560, it becomes more probable that we're going down and possibly even form another low in the area around 75K. So yeah, that's the update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, if you want to join our membership live stream on Sunday, and if you want to receive many more benefits, check out our gold membership. You'll find the link in the description. Also, for further updates, further insights, real-time discussions, also check out our X profile. There's additional content. Updates are being sent through there as well. We make polls and we're quite active here on X, so check it out as well. Link is in the description and pinned in the comment section. Thank you very much. Bye-bye.